Thank you, Ala. I think it's always a challenge getting people back in the room after a coffee break. But I think we're good. So first of all, I mean, a warm welcome from my side as well to all clients who've flown in from different parts of the world to attend this event. And again, thanks to Khurram for leading this and organizing this and making it quite an industry benchmark. So appreciate all the work that goes around with this. So before I start my panel, just a little bit, taking cue from what Jerry said earlier around the growth strategy for the financial institutions business, right? So we talked about, how FI is important in terms of SCB strategy and how we can bring the value of the SCB network to our clients. So basically, Islamic banking is actually very integral to enable that growth strategy for FI. So we see SADC as a banker to the banks, catering to end-to-end solutions for Islamic financial institutions, as well as Islamic windows of conventional institutions. We have over 200 relationships across the network of Islamic FIs, and that number is growing. We feel we are proud to say that we are the only international bank that offers the full capability, full suite of transaction banking products across multiple markets. We know that foreign currency clearing is a very integral component for any financial institutions, ongoing needs. We recognizing that we offer US dollar and Euro Islamic clearing from New York and Frankfurt operations. This is in addition to cash management solutions, so Islamic cash management solutions that we offer out of SCB, UAE, DIFC, Bahrain, Saudi Arabia, Malaysia, and Singapore. We are also very, very active in the Islamic FI trade financing aspect. So we cover multiple clients, Islamic FIs across the globe, and we have their propositions supported out of Singapore, UAE, and DIFC. In addition to that, we are very active with respect to Islamic risk participation for trade, both unfunded and funded. That's actually through multiple agreements we've signed with Islamic FIs, enabling sort of the growth of trade finance. So just moving on to the topic, right? So first of all, trade finance has always been the engine of economic growth. But today we are operating in a very different landscape. The global trade finance gap has now reached $2.5 trillion as per the Asian Development Bank. Mustafa Adil earlier spoke about Islamic finance assets, which touching about $4 trillion and expected to grow a lot in the next couple of years, which signals a significant balance sheet strength and growing investor appetite for Sharia-compliant solutions. Despite this growth, however, Islamic trade finance remains a small share of total global trade finance flows, and we think it's well below 10%. Eric talked about it. As we can see, the geopolitical landscape is shifting beneath our feet. We're seeing new challenges such as increasing global fragmentation, a return to protectionist policies and bilateralism. This is reshaping global supply chains, adding complexity to cross-border trade, and challenging access to affordable liquidity. So the question we are here to explore today is this: what will it take to unlock the full potential of Islamic banking to support global trade and liquidity management, not just in principle, but also in practice? How can banks, both Islamic and conventional, global and regional, work together more effectively? What role can multilaterals, risk-sharing models, digital solutions, and innovative structuring play in bridging this gap? And how can we ensure that Islamic finance is not only reactive to those challenges, but proactive in shaping more resilient, ethical, and inclusive trade flows? To help unpack these questions, I'm joined by a distinguished panel of leaders who bring perspective from across the global financing ecosystem, from treasury, from financial institutions coverage, from transaction banking, and from banking institutions in the GCC to Turkey and Malaysia, so truly global, as I can see over here. Together, they will share insights on what's working and what's not, and where we need to focus on our collective efforts on. I'll introduce the speakers that we have here. I'll try to be brief, as there was a comment on that. So I'll start with Khalid over here. Khalid is basically head of FI at Inma Bank in Saudi. He's had over 15 years of experience in the Saudi banking sector, driving international and domestic FI relationships and building synergies in partnership. He has extensive experience working with multiple Saudi banks, conventional, before he joined Inma as an FI head. Next to Khalid, we have Azdini. She's flown all the way from Malaysia. She's treasurer for Bank Islam Malaysia. She's got extensive experience of over 28 years in the financial industry, mainly in global markets and treasury. She's also a member of various industry forums within Malaysia around Islamic financial markets, as well as the Financial Market Association of Malaysia. Next to Azdini, we have Lyle. Lyle has joined us from AUB Bahrain, which is a leading sort of bank in GCC. She's an experienced professional with background in transaction banking across regional markets for both conventional and Islamic banking. And finally, on the extreme, I have Sirhan, who's basically flown in from Turkey. Sirhan is EVP in charge of Treasury, Capital Markets, ALM, and International Banking at Albor Khatam Bankasi. We will definitely get benefit of experience in global financial markets and liquidity management, as well as risk mitigation as part of this discussion. So I'll just move over. Okay, I think you can hear me. So the global trade finance gap disproportionately impacts emerging market. We will talk about Islamic finance can contribute, how Islamic finance can contribute to address the trade financing shortfall in a deglobalizing world. And we'll also talk about untapped opportunities for Islamic finance in facilitating global trade. So maybe I'll kind of start with Lyle to you over there. So the first question I have is around what are we seeing from clients, right? So what are you hearing from your clients in terms of financing needs, and how can Sharia compliant structures be adapted to support trade flows?
Thank you so much, Faisal, and thanks to the SEB team for such a great event. It's a pleasure to be with you. I think what we hear from clients is very clearly to accommodate to more financing solutions in the open account space. Up until now, 80% of the trade flows are focused on the open account space, and this is where we need to bridge the gap and innovate as Islamic banks in introducing more advanced types of programs, be it receivables, payables, anchor-based, with all kinds of recourse, insurance-backed, ECA-backed ones, so on and so forth. I think there is much more work to do on the Islamic banking space in this part of the region, at least, especially that in the MENA region, and as per the latest basically studies and surveys that were floated, in the MENA region, receivables and payables programs are actually equally important. So I think more work to be done on that side. We all took a step back in inventory financing, be it conventional banks or Islamic banks, but it is a requirement that comes up very frequently by clients due to its complexity, pricing, and beyond. So it is something to be addressed definitely, and we do see opportunities there. Lastly is obviously SME lending, and I think the more we do buyer-led programs, the more SMEs are going to be benefiting from these kinds of solutions, and something that is extremely important in whatever solution that we roll out to clients is documentation and onboarding to be lighter and to use as much digital experiences as possible.
Thank you, Laila, for those insights. I'll move on to the other panelists. I mean, taking cue from that, what do you think is holding back Islamic banking from playing a larger role in financing trade flows? And what will it take to scale Islamic solutions more meaningfully? Khalid, probably first to you.
Thank you, Faisal. Assalamu alaikum wa rahmatullahi wa barakatuh jami'an. Firstly, I would like to take this opportunity to thank the whole of Standard Chartered Bank's team for this great gathering, and I'd like to thank everybody today for being here. Thank you very much for giving us your time. Generally speaking, there are a couple of challenges that may hinder how the trade finance space works more effectively. One of the challenges you have is harmonization between institutions and how they deal. Now, in the ecosystem we have today, the ecosystem was based on a conventional space initially. Islamic banks came in later, and as they came through, there was this challenge always between having products that are applicable from a Sharia compliant perspective, and then things that are workable as well with other global banks that are used to being conventional. This harmonization took some time to come into place where global players, more conventional players, they were not very familiar with the Islamic products and the Sharia concepts. And later on, it became quite a significant part of the market. So in the past couple of years, Islamic banking has been issuing a lot of assets into the market. And Islamic assets are now more abundant as opposed to before in the market. So it's becoming an inevitable participant in this space. Another challenge that also had a lot of influence is standardization. Looking at the same idea of this ecosystem, there's not a single standard that is being followed by all Islamic banks globally because of maybe some different views between some scholars, some different views in some jurisdictions, and how could this be conditioned to what you're doing locally. Those are amongst those challenges that remain, but the beauty of this is it's a process, it's an ongoing process. So what's happening is, as we mature more into this process, we're becoming more innovative and we're able to deploy products that are meaningful to the clients. And this is the bottom line. If the product is not meaningful to the client and it really doesn't serve the purpose, you will not get anywhere with what you're providing, which is the business of providing services to the clients. With that being said, one of the largest enablers that today could become a vital and critical solution is enabling technologies and enabling digital transactions to move forward. Because one of the challenges and the complexities under Sharia compliant agreements is having qabool and ijaba and maybe going back and forth a couple of times, which adds to the complexity of the process. And maybe this is one of the biggest challenges that I've noticed transitioning from conventional to Islamic. How does that work? Maybe, or how can we make this work actually, is making things more effective on a back-to-back basis. And today, there are great technologies that support that. So blockchain technology, for example, if it's being adopted in a good way, then this would for sure create a solution for this gap that is in the middle. And this is a direction that is being adopted in a lot of places. And I would like to exemplify with the Saudi Central Bank and SAMA, where a number of years back, they've developed the Saudi FinTech, which turned into something that sprouted a sandboxing environment for the central bank. Today, a lot of solutions are being, a lot of challenges are being posted there and being sandboxed, where we're coming up with new solutions. So, for example, one of the things that were standardized in Saudi was the double wide agreement that was initiated by SAMA. This created a solution that also may not have been workable for other jurisdictions, and that's one of the challenges in that space. But generally speaking, I think Islamic banking is on the right path of becoming more innovative, and I believe that it should adopt more technologies in order to close those gaps.
The interesting perspectives, Khalid, especially what's happening in Saudi and the technology, platform and how they can digitize. Some useful thoughts from your side. Moving on to Azdini, I mean, you as the treasurer of a leading Islamic bank in Malaysia, what are your thoughts around how we can scale Islamic solutions up?
Assalamu alaikum, everyone. Thank you so much for this opportunity. Now, just taking through from what Khalid has mentioned just now, to me, if I can go back to what's holding us back, it would be the product innovation, time taken to innovate, and time to market, which I feel for the Malaysian market when COVID hit us, and we were told by the central bank to give 6 months moratorium to the clients. So some of the structures, some of the Islamic structures that we have doesn't allow that extension. So we had to quickly innovate. For example, the Murabaha purchase order. The structure that we have does not allow us to extend, so we had to quickly come up and innovate. So when you are stressed, that is when you realize we can do it fast. We can, right? So number 2 is acceptance by both parties, like my colleague here has mentioned. It has to be accepted by both parties. So that conversation and understanding is always ongoing. In Malaysia, we have Association of Islamic Banks, and we also have the central bank leading a lot of conversations and product innovations, right? So sometimes they have to come in to mediate, but at the end of the day, you can't do something just for something that satisfies you. You have to ensure that the other party is acceptable to it. And of course, number 3 is clients' understanding, whether the customer understands the Islamic structure. So for Malaysia, Bank Islam Malaysia was established in 1983. But it's not until early 2000 that Islamic banks become something at the forefront, right? It was always perhaps a window. So early 2000 is when the separate entity was established. And that's where the central bank tried to push forward Islamic banking. So from that time, a lot of customers think, okay, Islamic banking is going to be super expensive, it's going to be very difficult. So from then on, we developed, no doubt, we had to compete with the conventional banks. But when we have to compete with the conventional banks, we're always trying to innovate and say, how else can we make this better for the Islamic clients, right? We do have a lot of halal companies. They manufacture halal goods, products, services, and so on. But they seem to be agnostic about the financing part of it. So what we try to do, at least for Bank Islam, to ensure it's an end-to-end solution for that. So on one end, they're manufacturing halal goods, but on the other, we have to ensure that there are solutions to finance what they require. Right?
Thank you, Azdini. I think it's an interesting example you talked about in Malaysia around adapting to that kind of change post-COVID, right? Yes. I think that's really important. I think our CEO, Rola, talked about creativity and innovation. I think the industry really needs to think about that. Yes. And I think that's a good example to obviously look how you can adapt to a market change. So I'll move on to Sarhan. I mean, Turkey is a mature and a diverse funding market, right? So what are your thoughts how, in terms of what more we can do to facilitate trade for clients?
Thank you, Faisal, and thank you for inviting me for this distinguished event. I would like to welcome all of you today. So it's a very relevant topic that we are discussing, trade finance and Islamic finance in the same panel. Well, of course, Turkey is a trade-driven country which has more than $600 billion of trade per year. So it is basically the most prominent activity as Turkish corporates are doing it in their daily life. So from banking perspective, trade finance is always a natural business line with all the international correspondent banks. Well, of course, coming from Turkey, you have these stressful times in most of in this kind of process. You see the big counterparties around the globe are somehow some limit allocation to Turkish banks. And being an Islamic bank in Turkey, most of us are mid-cap banks. So most of the international big banks that are providing lines in trade finance, Turkish banks, are mostly preferring the first-time banks in terms of dealing in trade finance business. And being an Islamic bank, lacking, of course, the basic fundamental structural contracts in place to provide to our corporates, it is another challenge that's coming from external factors. Well, at that point, of course, as Islamic banks, you always find ways to cater the needs of our corporate clients in trade finance. But what is most important thing I believe there is in the market is that we see more and more integration, collaboration with international Islamic key players, with international associations of, let's say, that facilitates trade finance, like BAFT and FCI and other types of structural documentations that are already in the commercial world, but was missing in Islamic finance. So we see ITFC is collaborating with FCI, factoring trade finance receivables. So they have come up with a structure of usable for Islamic finance. Also MRPA, Master Risk Participation Agreement, came from IFM and BAFT collaboration. So these things makes the life easier for us. But of course, it doesn't come overnight. So we are trying to convince our Sharia committees to somehow adopt this documentation. But of course, we may have some small updates on the documentation down the road to make it even more user-friendly. But the thing is, at the end of the day, our corporate clients are looking for tenors and deferred payments in trade finance, because Turkey is a capital-light country, especially it's more of a case for corporates. So they need tenors and deferred payment aspect to the trade finance. The only way you can do this, you have to have a sound line with big global banks. If that's not the case, or that's not enough to cater the needs of all of your corporate clients, then you should be using some other, let's say, facilitating contracts, which is, in this case, comes with collaboration, as I mentioned, with ITFC, BF, and others. So that helps us to at least introduce some facilitators in trade finance to our corporate clients. But I think more should be coming down the road. And I'm sure that all the Islamic banks in Turkey will be more than happy to adopt this kind of structures coming forward.
Thank you. I think definitely Turkey has, both challenges and opportunities on that front. And being an Islamic bank in Turkey, obviously you need to have access through those kind of solutions that you can support your clients and grow your balance sheet. Just taking cue from your comment around collaboration and partnerships, maybe Khalid, again to you, really around where do you think industry players could do more in the next 2 to 3 years to mobilize more meaningful partnerships across the financial ecosystem?
Well, there are a couple of, ITFC, for example, has pushed north of $70 billion since 2008, trying to support OIC countries and purposes. So it's been there, the partnerships have been there, but in my humble opinion, maybe they haven't been activated or synergized in the best way possible. There's some disconnect between, in my humble opinion, there's some disconnect probably between the FIs and those agencies when it comes to understanding the actual purpose of such funding when it's done commercially on a commercial space. So even if commercial banks want to jump in eventually and trying to enhance and improve this reach out, commercially sometimes it may not be feasible, and that is one of those challenges. The other thing is there's sometimes a challenge with some of those solutions on the back of some interest-based tools or clauses which work one way for some banks and doesn't work the other way for other banks. So that limits your sample of the population that could actually go and add value to that. So to make those partnerships more meaningful, I think there should be better synergies between those institutions, because what they do, they help out in de-risking and sort of making the underlying risk much more comforting to any undertakers. And this adds a lot of value because there's a lot of conservatism from a credit perspective when it comes to banks, probably even, let me say, in GCC and in Saudi. However, there's also a lot of support to those purposes. So, and there's also a big population that sits under there as a benefiter, which is the SMEs. And the SMEs, the SMEs are, in at least in the Saudi market, let's say, there's a lot of conservation towards SMEs, and it's still a challenge. And the reason is they're not as complex in terms of reporting or whatnot, because they were family-owned companies at one point of time. So the reach was very different to them. And they are a large driver in those emerging economies, and those interactions with SMEs in Saudi are very crucial and very important as a catalyst for this trade flow. So if this conservation is not addressed, the partnerships would not be really put into good utilization and becoming more meaningful.
Thank you, Khalid. Insightful. Just talking about collaboration, there's important to recognize trade involves suppliers and buyers across borders. Lyle, coming to you, how do you think international counterparts view Islamic trade finance solutions compared to conventional options? You obviously have good experience moving from a conventional to Islamic bank, and Khalid, you as well. That was also interesting perspectives that both you bring within the GCC. But Lyle, over to you on that question.
So they are, I'd say, more receptive, especially the ones that are in markets where Islamic finance is the norm. But some are extremely, or some are in the learning curve, I'd say. Or have plenty, honestly, of facilities. So the question comes, why do I need to carve out an Islamic tranche? And I think that almost each one of us in this room have had such a conversation. Not only was my background conventional, then switched to Islamic, but we've personally undergone a transitional period in 2023 at AUB, whereas we had to convert from a conventional bank into an Islamic bank. And that was quite interesting because our corporate portfolio included clients from over 25 jurisdictions. So we did have these very deep discussions and educational sessions, awareness, etc., with all of these multinationals. And we did have to redesign and change certain things in the standard structures in order for us to accommodate for their requirements. So I think this is why it was a successful transition from a conventional to an Islamic bank, being close to them, but at the same time, not just working on standard ways of doing things in the market, yet innovating new standards. In addition to the use of technology heavily in order for us to basically assist in the operational activities of things. I'll just give a very small example, and I'm sure that almost all of the banks do that. But when you have, for example, millions of commodity murabaha transactions, that small connectivity through APIs with the brokers helps out in doing a transaction from minutes into seconds. So, or hours into seconds. So these are the kinds of small things that are coming up. And that would help out. Last note is definitely conventional banks are going to help us out. So the more conventional banks collaborate with us in proposing hybrid programs, the better it is for the whole industry, obviously.
Thank you. I think the important point is that it's not always about catching up, and there's a lot about innovation as well within the industry. So that's a good examples you've given in Bahrain in your organization. Just shifting gears a little bit towards liquidity, which is obviously integral to support cross-border trade as well. In a world of divergent interest rates, currency volatility, and tighter global liquidity, how are Islamic banks managing their liquidity positions while supporting trade finance? I think, the question follow-up to that is also about what innovations can we look at in terms of Sharia-compliant liquidity management? So maybe, I mean, I'll start with you, Sarhan, on that, and to share your thoughts.
Yeah, sure. Liquidity management is a task that we face day to day, and which is sometimes could be very challenging, especially in successful times. What in Turkey, there is also an aspect to that, which is dollarization of the country itself. So you don't only deal with Turkish lira's liquidity, but also you have to face the hard currency liquidity needs that you will be facing daily life. Well, if you differentiate liquidity management from in two segments, which is the short term and the long term. Of course, in the short term, you should have this sound mechanism introduced by central bank and other regulators, which makes things easier to manage liquidity, which is more or less the case, exists in Turkey. Well, with the help of central bank and banking watchdog, they have introduced some markets and structures that are quite in line with the international practices that we can manage our liquidity in Turkish lira. There are still way to go, but I'm sure the fundamentals, the basics is there. But from hard currency perspective, and in Turkey, where you don't have an investment grade, you should be having these lines always open to you whatever happens outside of your bank. So there should be clear mechanisms that you have already set in place with international liquidity providers and hard currency, with Islamic structures, of course. Well, in that space, IFM has helped a lot and done a lot during this course of years, I believe, by introducing lots of conventional equivalent liquidity management structures into Islamic finance, like master murabahs, collaterals, murabaha, master tahawut agreements, then other types of structural documentations. That helped us a lot. I mean, to be honest, we tried to negotiate this kind of documentation with all of our counterparties, in GCC mostly, and in Western world as well. So under these structures, we can utilize these limits all the time. What was missing in this collaboration was what to do in times of kind of a stressful economic environment that is ongoing in Turkish markets. Well, in that side, we started to use the collaterals against our borrowing, which helped a lot to manage our liquidity. Recently, for a couple of years, there has been some ups and downs in Turkish markets. Before the general election, we have seen the liquidity on hard currency side was very challenging. So we used a couple of hard currency collaterals on the back of our borrowing, which helped us to bridge these stressful times into a better benign environment. And then when things are good, everybody's okay with all types of structures. You know, you come up with sukuk issuances, you come up with uncollateralized borrowing and with any counterparty, but when things are tough, these collaterals made the life much more easier. And we also, as Al Baraka Turk, we are a primary dealer in international Islamic liquidity management, which issues, as we all know, short-term investment grade sukuks. And alhamdulillah, this year we had also used this as collateral for Turkish refunding as well, because the appetite was there, the environment was okay, and the structure was in place. So that bringing all these kind of key aspects to the liquidity management helps you a lot. In the long term, as I was mentioning at the beginning of my speech, that I think it's mostly the collaboration with international lenders, which are, from my perspective, is MDBs, DFIs, that provides long-term affordable credit lines on the back of some maybe thematic borrowings like trade finance, sustainability, green transition, etc. So we started to do this kind of engage with these MDBs and DFIs for the long-term affordable financing to at least bring down the cost of funding and also have a more sustainable long-term financing line. So it really helps in the long term to manage your liquidity from liability perspective as well. And also, the more financing you have, the more capability you can provide to your corporate clients. And there are some specific even programs for trade finance even, like World Bank, a subsidiary ITFC is providing global trade finance program. I mean, I know I don't want to go too much into details of it, but they have adopted some Sharia compliant alignments updates to their structures that they usually sign with commercial banks. We have gone through this experience recently, and they were very okay with the idea of adopting some Sharia compliance concerns and aspects to their documentation, which allowed us to be onboarded in the program. So by means of this program, I believe we are going to provide much more leverage to our corporate clients' trade finance transaction, which will help me on the long-term in liquidity perspective.
Thank you, Sarhan. I mean, really good ideas. Azdini, moving to you. I mean, as given your capacity as a treasurer, if you look at liquidity management, same question in the concept of both funding and management of liquidity, your thoughts?
Right. I think much has been said by my colleague here, Sirhan, so he literally covered whatever that we do. So treasury, global markets, the products or instruments that we use are typically the same. But for Bank Islam, we've moved a little bit further, one step further, and we now have investment account. So under Bank Islam, we have Ihsan Sustainability Investment Account. So not just any investment account, but it also, we have the underlying of sustainable investment and sustainable financing, responsible finance. So we are also looking at doing private credit structures. So it's not just getting funds from depositors and then having it pooled in to fund our assets, but we're also looking to see how else can we help our investors to get better returns. So what we are doing right now is to set up a private credit fund, right? This is just first tips. I'll give you the overall. So we will be looking at the credit management. We will do the reviews on an annual basis, but we charge a fee for that, right? So the returns will all go to our clients, our investors. But of course, we will have that performance fee that we also share. But other than that, when you talk about treasury, global markets, it's basically the same, right? So when you talk about partnership now, you look around you in this room. This is partnership. We really need this, else you wouldn't be here, right? You can't function on your own, especially for standalone Islamic banks like ourselves. We don't have a conventional parent to fall back on, right? So we rely on our partners here. So this forum really is very important to us, key.
No, thank you. I think that's the whole idea, to bring the industry together. I mean, as you say, it takes two to tango. In this case, probably take more than two. I think clearly the point is that while there's significant demand to support trade finance, there's also important to recognize there's also significant and abundant liquidity pools available within Islamic financial institutions. So I think that some of the aspects you've talked about provides that diversification of liquidity pools to support that growth.
Yeah. So actually, we as the financial institutions, we are also the matchmaker. You have people who are looking for assets, and you also know people who are needing financing. So we also function as a matchmaker. So.
No, that's very valid. Lyle, coming to you on the same, but given your context as a transaction banking head, covering corporate SME clients as well, what are your thoughts looking at from a liquidity management challenge and perspective?
So we definitely see on liquidity management a room for improvement in terms of Islamic finance structures that are around cash pooling, intra-company borrowing, intraday limits for corporates that are structured in a very seamless Sharia compliant manner. I think that there is a way to definitely do better in that area. And not only Islamic banks, but we also expect that from vendors, technology companies, etc., to focus further on improving, I would say, the offering of liquidity management Islamic structures. I think it's extremely critical, especially that our region is full of conglomerates, group companies, family businesses that are very much in need of such kinds of structures. So this is, I'd say, the focus area that we need to work further on.
Thank you, Lyle. Just conscious of time. Maybe before we, go for closing remarks from all the panelists, maybe you can go for Q&A if there are any questions from the audience. I think there's one there.
Thank you, everyone. Very insightful discussion and a bit unusual. I was commenting earlier on the day, very happy to see the diverse mix, people from different backgrounds, both Treasury, TB, and different locations. So very interesting conversation overall. Just connecting to some of the earlier points we heard today, Eric Robertson mentioned, for example, that there's a significant risk in increase of long-term funding due to whatever is happening globally. And that's something a lot of us have been anticipating and dreading to a certain bit. This obviously is going to put pressure on margins and liquidity. So I'm sure more than a few of us would be keen to hear from you on how banks expect to remain competitive and then deal with these pricing and liquidity challenges in the days to come.
Thank you. Maybe I can take a stab at that and see if my fellow panelists want to add. I guess one key area to look at is around how you can mitigate, through risk sharing, which we either do bilaterally with other Islamic and conventional banks, Islamic windows, as well as through the other multilaterals. So I mean, we in Standard Chartered, obviously we are a major trade bank. We have significant trade flows across different parts of the corridors. We obviously need to recognize that many of the markets we operate in have a strong Islamic banking clientele, and as such, we've developed those capabilities. So we have signed multiple Islamic MRPAs with a lot of the Islamic banks in the region, as well as some of the DFIs operating in this part of the world. Those basically help facilitate us in being competitive. So while helping us to achieve credit mitigation as well as capital sort of relief, they do allow us to sort of continue to support growth and support our clients in this environment. So clearly, I think that's very important in terms of how we can continue to be relevant. With what Eric talked about, the challenge that's likely to happen, I think it's important that we work even more closely and see how things are evolving in terms of the changing trade corridors and trade partners. We in SCB feel we are very well prepared given the network we have, and we will continue to work with our clients to make sure that other Islamic FIs, how we can enable the growth despite this challenge. Anybody wants to add anything to that? Azdini?
Sorry, maybe I'll just add on to that. Now, when we had the meet and greet session yesterday, one of the key topics was on liquidity and how else can we obtain long-term funding. Short-term, that's fine, but anything more than 6 months, especially when it comes to 1 year, 2 years, 3 years. And you know very well you need that because your financing tends to be quite long, 5, 10, 15 years. How else can we obtain cheaper source of funding? Because you know very well that will then translate to your cost of fund for your assets, trade finance, term financing, and so on. I believe I had a very fruitful conversation with Standard Chartered people, and they were saying that there are some structures that's going on and that's quite popular in the Middle East, and they say can we do the same for the Asian market or Malaysia specifically? So those are the conversations that's taking place, and I appreciate that because yes, Nora, you're right. Long-term financing is a big risk, especially when you have LCR and SFR to manage. For those of you who are not very familiar, liquidity coverage ratio, LCR is for short-term, and you've got the net stable funding ratio and SFR looking at the long-term funding, which is always a problem, maybe perhaps for the local banks in Malaysia at least. But yeah, that is one of the bigger themes around us.
Lots to keep you awake at night. Sarhan, you wanted to add anything to that?
Quick addition to the staying competitive in trade and this kind of stuff. In the country I'm coming from, the Islamic banks are still solid and mostly rely on relationship banking. So even though you stay a little bit less affordable in terms of pricing that you're providing to your clients, the relationship banking still plays a part in terms of convincing the customers to still work with you, because you not only provide the specific solution that is less affordable, but you also provide other types of services to the same client to convince him to stay with you. I'm not sure how much this model may actually play out during the course of time, but of course, we need some updates to that model in the country, but still, even though you are less affordable for some reason, from economics of scale, less of structures, etc., this is how we try to be competitive in the market.
Thank you. I'm just conscious of time. Maybe I'll just move on to closing remarks for each of these panels. Anything you want to say, 30, 60 seconds in terms of what you want to leave the audience with before we close this panel. Khalid, over to you.
Innovation is a key. Tokenization should be taken into consideration, just like CBDCs and what's happening. And efficiency will drive, in my humble opinion, how this formulates in the future and what shapes the Islamic banking space.
Thank you, Khalid. Azdini.
Client needs, end-to-end solution, and of course, digitalization and using technology, because that will expedite turnaround time, as well as hopefully, to a certain extent, perhaps managing the KYC and AML, which is always an issue. Right?
Thank you, Lyle.
More collaboration across FIs and between conventional and Islamic banks and hybrid programs is definitely a necessity going forward.
Yeah, maybe an old school suggestion, but with this IOF 62, I think the Islamic banks should be more closer to the securitization asset-backed structures. And I believe trade receivables even could be a kind of asset class that we can use as a leverage to raise some liquidity on the back of this kind of assets. So I thought we should be complementing our ecosystem from all aspects to go one step further to tokenization. That's all I can say. Thank you.
So thank you. I think, really helpful to hear different perspectives, but a lot of common ground to cover. Interesting examples from each of your markets in Saudi, Malaysia, Bahrain, Turkey. It's really important how we can bring institutions from different parts of the world to talk through and try and sort of look towards common goals. So thank you once again for all of you to join this panel. Thank you for your time, and thank you for everybody to listen to this panel.